The Motley Fool just sent out an interesting presentation. They claim there's an emerging $3.7 trillion market coming, and they believe certain stocks will explode like Nvidia did in 2016, when it was just $1. In this video, I reveal the two stocks being pitched by the Fool so you don't have to buy their newsletter. No paid or proprietary info is given away here. It's all guesswork based on clues in a publicly available presentation. There are multiple stocks to uncover, so we're just going to jump right into it. This presentation is about the rise of stablecoins and the companies that will benefit from them. A stablecoin is a type of cryptocurrency designed to maintain a stable value by pegging it to a reserve asset like the US dollar, gold, or a basket of currencies. This makes it less volatile than typical cryptocurrencies like Bitcoin or Ethereum. The Motley Fool is pitching the companies that provide the infrastructure for these cryptos. Here's the clues for the stock I'm 100% sure on. Another company on our list serves over 5.5 million merchants and now enables USDC stablecoin payments in 34 countries. By giving businesses instant stablecoin access and cutting costly fees, we believe it's positioned to capture a slice of the potential multi-trillion-dollar market. And yet, most investors won't think of it because it's not directly tied to issuing coins. This is Coinbase, and they reach 5 million merchants in 34 countries through their integration with Shopify payments on the Base network, enabling low-fee USDC acceptance. Now, some people get confused about how buying a stock that's $300 could be comparable to a stock that's $1. You have to understand that Nvidia does stock splits to keep its price more affordable. Nvidia may have been a split-adjusted $1 in 2016, but its market cap ended the year around $68 billion. Coinbase's market cap is around $83 billion, which is in the same ballpark as Nvidia in 2016. Here's what to know about this stock. Coinbase, founded in 2012 and publicly listed since 2021, has grown into the leading U.S. cryptocurrency exchange with a presence in more than 100 countries. The company operates a core trading platform that serves both retail and institutional investors, while also offering Coinbase Wallet for self-custody digital asset storage. Beyond trading, Coinbase has expanded into infrastructure services such as cloud, staking, and custody solutions, and has launched Base, its Ethereum Layer 2 network designed to improve scalability and efficiency. At its core, Coinbase's mission is to accelerate global cryptocurrency adoption by providing secure, compliant infrastructure that bridges traditional finance and the digital asset economy. Coinbase holds a dominant market position as the leading U.S. cryptocurrency exchange, maintaining significant trading volume and long-standing brand recognition. With lifetime platform volume exceeding $2.4 trillion, the company has established itself as a critical fiat gateway, serving as the primary bridge between traditional financial systems and digital assets for millions of users worldwide. While it competes with platforms such as Binance, Kraken, and Gemini, Coinbase has strategically diversified its business into stablecoins, payments, and broader blockchain infrastructure. Its emphasis on regulatory compliance, strong banking partnerships, and institutional-grade security protocols further strengthen its reputation as the most trusted platform for both retail and institutional investors. Coinbase's financial performance is heavily influenced by crypto market dynamics, with transaction fees serving as its primary source of income. This revenue stream is highly sensitive to volatility, rising sharply during periods of elevated trading activity and contracting during quieter markets. To balance this cyclicality, the company has built a growing subscription and services segment that includes staking rewards, interest from USDC reserves, and cloud-based infrastructure offerings, which provide a steadier flow of income. Coinbase maintains a strong balance sheet, supported by substantial cash reserves, strategic crypto holdings, and more than $80 billion in customer assets under custody. Nonetheless, profitability remains cyclical, as bull markets drive strong earnings while bear markets put pressure on margins. Coinbase has several key growth catalysts that could support its long-term expansion beyond core trading. The company is positioned to benefit from the global adoption of USDC, as stablecoins gain traction in cross-border payments and international commerce. Institutional adoption also presents a significant opportunity, with growing demand for custody services, infrastructure to support Bitcoin ETFs, and potential advantages from clearer regulatory frameworks. Coinbase's Base network, its Ethereum Layer 2 scaling solution, is another driver of growth, as expanding developer activity and ecosystem development could translate into increased transaction fee revenue. Finally, a broader crypto bull market, fueled by Bitcoin price appreciation, higher trading volumes, and new user onboarding, would provide a natural tailwind. Together, these catalysts highlight Coinbase's potential to expand into multiple revenue streams well beyond its traditional exchange business. Coinbase faces several notable investment risks that investors should carefully weigh. The company remains heavily dependent on crypto trading activity, leaving its revenues highly concentrated and vulnerable to the cyclical patterns of market sentiment. Regulatory headwinds also pose a significant challenge, with ongoing SEC litigation and uncertainty around the future evolution of the regulatory framework creating potential obstacles for growth. Competitive pressure is intensifying as decentralized exchanges gain traction and global rivals look to expand into the US market. In addition, the inherent volatility of crypto prices continues to affect both operational performance and investor sentiment. Ultimately, Coinbase's investment thesis is closely tied to the maturation of the broader crypto market and the pace at which regulatory clarity is achieved. I'm going to reveal the rest of the stocks in 15 seconds, but before I do that, I want to remind you to sign up for my free report on the top 10 stocks to buy and hold forever. This report comes with no gimmicks, no get-rich-quick nonsense, just solid long-term investments you can actually feel confident owning. Click the link in the description to get your copy right now. Coinbase is fast-growing and is a good company overall. The valuation is a bit stretched though, and I'd wait for a better entry point. The second stock I'm not 100% sure on, but I'm pretty confident I figured it out. Here's the clues. One is a company critics have said stablecoins will bypass, but it's been quietly laying the groundwork to make sure they don't. While most revenue still comes from traditional transactions, it is working with major crypto platforms to let customers spend digital dollars anywhere, while merchants get instant payment in regular currency. Our proprietary quant analysis is even projecting annualized returns as high as 25% if things continue at this pace. I'm pretty sure this is cycle. Here's what to know about this stock. Circle Internet Group was founded in 2013 by Jeremy Allaire and Sean Neville as a peer-to-peer Bitcoin payment platform, but the company soon made a strategic pivot from payments to building stablecoin infrastructure and advancing blockchain governance. Today, Circle has established itself as a market leader through the issuance of USDC and EURC via regulated affiliates, operating out of its headquarters in New York City. Circle commands a powerful position in the stablecoin market, with $72 billion in circulation that makes it the second largest issuer globally. Alongside Tether, the two control roughly 80% of the market, underscoring their dominance. In Q2 2025, Circle reported a 53% year-over-year revenue increase, generating $658 million, driven largely by a 90% surge in USDC circulation. The company's revenue primarily comes from short-term US Treasury reserves, subscription services, and fees tied to USDC usage. Despite this strong growth, Circle posted a net loss of $482 million in the quarter, largely due to one-time IPO-related charges. Circle made a strong entrance into the public markets with its June 2025 IPO, raising $1.1 billion at a valuation of $6.7 billion. The stock debuted at $31 per share and quickly surged to close near $83, reflecting robust institutional interest and an appreciation of more than 80%. Analyst opinions, however, remain divided. Bernstein reaffirmed a bullish $230 price target, while Mizuho issued an underperform rating with a far more cautious $85 target. Circle currently holds an RS rating of 87, signaling strong momentum, though analysts note that clear entry points for investors have yet to emerge. Circle is pursuing a proactive regulatory strategy, applying to the Office of the Comptroller of the Currency for a trust bank charter under the name First National Digital Currency Bank. This move would allow the company to custody reserves and tokenized assets, though it would not engage in deposit taking or lending. Circle's reserves totaling $61.9 billion are held at BNY Mellon and managed by BlackRock, ensuring a high level of transparency and security. The company's approach is closely aligned with the Genius Act's requirements for safe and liquid reserves, reflecting its commitment to compliance. As regulatory clarity continues to develop, major financial institutions such as JP Morgan and Goldman Sachs are also exploring stablecoin initiatives, reinforcing the sector's growing legitimacy. Circle's investment profile reflects both notable strengths and key risks. The company has established clear market leadership in the rapidly expanding stablecoin sector, supported by strong institutional backing and 53% revenue growth momentum. Its proactive regulatory positioning, including the pursuit of a trust bank charter, further underscores its commitment to long-term stability. However, investors must weigh ongoing net losses tied to IPO costs, valuation concerns with some analyst targets as low as $80 to $85, and intensifying competitive pressures. Regulatory uncertainty also remains a significant factor. Going forward, investors should monitor the timeline for trust bank approval, track earnings and USDC circulation growth, and stay attuned to stablecoin policy developments. Overall, Circle appears well positioned at the intersection of crypto innovation and traditional finance. Circle isn't a company I feel strongly about investing in. It's very new and I'd like to see how it performs for a bit before buying. This one goes on to a watch list. Before you go, don't forget to grab my free report. The 10 stocks I believe you can buy today and hold forever. It's packed with solid long-term picks you won't hear hyped up anywhere else. Just click the link in the description, enter your email, and I'll send it straight to you.